Hello, everyone, and welcome back to TradeFinder Live. It's great to be back with you on this Tuesday during trading hours. I really enjoy this format that we do now that we've switched it to live trading hours and being able to apply all of the information that we receive in this session. So without further ado, let's go over our disclosure disclaimer agreement that we have to show for all of our sessions or webinars. This mainly is to take away that we are not licensed investment advisors in the United States, so nothing is to be taken as personal investment advice. This is available on our website at all times, so please feel free to read it in detail at your leisure, or feel free to take a screenshot of it now, but that's the main point to take away from it. Other than that, before hopping into the market, all the good stuff, and introducing the man of the hour, I do just want to remind everyone that we are planning to move TradeFinder, so this session currently that we're in, solely to all of our streaming platforms. We found just for a number of different metrics that we've analyzed and a whole bunch of factors that come in, variables that weigh into it, it makes the most sense. And so we will give you another few announcements that you'll be sure to hear from us on the way to find us on YouTube or any of our other streaming platforms if you might not have familiarity with that. However, I just wanted to give the first or second vocal now and make sure that everyone is aware we will be fully transitioning to YouTube, so there will be no invitation from Zoom and obviously no way to join Zoom. We're just not going to have TradeFinder on there at all, and so we will be sure to remind you and have more information on that coming soon. Market's breaking up to the upside, so yesterday was an interesting day. We had a crypto run with over the weekend, and I just discussed that a bit with Rob and EWO Trader Live. But is that a confirmed breakout with the market that we're seeing on the upside today? Not sure. Looking forward to hearing the experts' thoughts on that. So without further ado, man of the hour, who we're all here for, that's Rob Roy.
Hi, everyone, and welcome to TradeFinder Live, along with Zach. I am happy that we are doing this during live market hours. A lot to talk about today. Interesting on the Fed. The headlines on the financial networks just before we came on was, did the Fed fumble? I don't know. I guess the media just has to come out and figure out their taglines that they're going to get the most viewers. I actually felt like the Fed kind of threaded the needle a little bit. We talked about this last week. I don't think the Fed wants to be playing politics. And so when we had Chairman Powell come out and say that they didn't see a need for rate hikes to not unduly hurt the economy, I felt like that was a political statement. The Fed doesn't want to get accused of playing politics in an election year. And so then we went to the Q&A afterwards, and a comment was made that the Fed is going to reduce the speed that they are reducing their balance sheet. So slow the speed that they're reducing their balance sheet. And if you're not really familiar with what that means, a reduction of their balance sheet is a form of tightening. So you add that into slowing down on the rate cuts or the whisper of a rate hike. He took that away. And then the slowing of the reduction of their balance sheet is kind of a form of easing. At least it really greatly slows things down from a tightening standpoint. So no need for a Fed rate hike, and slowing down on reducing their balance sheet keeps liquidity in the market, because when they reduce the balance sheet, it withdraws liquidity. So that leaves it in there. So to me, that's kind of a quasi easing type of a mode. So they did comment on how inflation's leveled off. So the speed in which inflation was coming down has leveled off. But I'm not sure we're going to see too much action before the election. They had said that there'd be the possibility of one rate cut by the end of the year, and maybe that's not going to be till after the election. So that might be at the very end of the year if they do that. So lots of stuff to talk about. Let's take a look at the charts. So as we move over and look at the S&P, talked about this triangle. All the markets had the exact same pattern. They all had these symmetrical triangles, even though a couple of them were in a wave 3 with a 4 that formed a triangle. Others had a wave 5 that went into a corrective triangle afterwards, but all the markets were in triangle. And we had talked about the dueling zigzags. Watched last week's recording. not going to draw them again. We're just going to take a look at the intraday chart, but you can clearly see that we're breaking to the upside. We don't have, at least not yet, that 1030 cross yet. So it's not a confirmed breakout for the zigzag pattern, but it is a confirmed breakout of the triangle. But when the triangle breaks out, we could actually run up here and hit this previous wave 3 high and bump our heads there and not break above it. So we need to get above that wave 3 before this upward zigzag is the confirmed pattern. And as you may remember, that brings us up here to about 550. That's where the S&P would go if we confirm this zigzag and it moves to completion. So we've broken out of the triangle. That part we do know, but we don't know if we can get above 525 yet. We're going to have to wait and see that. And on this move here, we're starting to get just a little bit above 10-day moving average. So the 10-day moving average is right there. Where we're trading is right here. So a bit of a vertical breakout. And, I don't like those. We need some backing and filling before we attempt to break above 525. We don't want to just run straight up there. If we do, then I'd submit to you that highly likely that we will bump our heads there, at least on the first attempt, and not break above it. So we need to get a little bit of consolidation in the markets here, in my opinion. And then if we do get that, then perhaps from there, we can take a shot at breaking up above that 525 level. So if I switch it to the intraday chart, you'll be able to see what's going on in today's trade with the movement to the upside. And there was another one of those gap ups, and we've pretty much done nothing since we broke to the upside on that slight gap up. And if I bring the chart out a bit, you can see that from an intraday standpoint, we've had several gaps. So the last 3 days, we've gapped to the upside on the open. And then that's been pretty much it. So we've had a gap up, little retracement, and then sideways, gap up, little retracement, and then kind of a slight drift to the upside that occurred yesterday. And then another gap up today and just going dead sideways. And note that you can get, and that's the beauty of this software, and if there's any way you haven't gotten a copy of it yet, go to hub.com, HUBB.com, and get the free version. It's in beta form. They're still tinkering around with it, finding the little snafus here and there that need to be fixed before the official launch of the software. But you get not only live charts, but you get live Elliott wave. And you can see what happened today when we gapped up. So this is follow through from Friday. The gap up yesterday was a wave 3, a little bit of a wave 4 retracement. The gap up today, wave 5, and right smack dab in the middle of that tap box. So I know on the U.S. market updates that I do every weekend on the Elliott Wave Options channel, we have some questions on Elliott Wave. I think we're starting to make some believers because some people are saying, hey, how do I learn more about this Elliott Wave stuff? We have great education on our website, EWOTrader.com. We pride ourselves on our education that we have there. This is why. Just look where we are. Just look at that move. This is the tap box right here. So this is the range that the algorithm thinks that the wave 5 can go to based on what's previously happened on the 1, 2, 3, and 4. And we've just pegged the midpoint of that all through the trading day today. And then the question becomes, what happens from here? Can we move higher? Can we move up to the upper end of the range? Or is that wave 5 over? And look, the extension is exactly at 100%, which is key. Because if the wave 5 goes past a 100% extension, you don't look for a retracement back to the previous 4. You look for a 61.8% corrective move. But if you hold at 100%, then you do look for a move back to the previous 4. So that means that if we do get some backing and filling, we could kind of retrace what's happened today, at least back to the gap and move back to this previous 4. But if we are able to break higher into the close today, then that takes that out of the equation, and we're not looking for as big of a retracement, just a little bit of a corrective move, maybe just filling this gap here, wherever the 61.8% corrective move is. That's all you're looking for. So I just wanted to show you this intraday chart on how absolutely spot on Elliott Wave has been. That's one of the beauties of the software. You can look at this stuff every single day, watching the intraday charts with Elliott Wave. So let's go back to the daily chart and we'll start looking at some of the other markets. Again, let's see where we close today. If we give some of that back today, or if we just kind of hold this pattern and look for a little bagging and filling maybe towards the end of the week. So let's look at the DIA. Obviously, we want to see what the Dow's doing, and kind of a very similar chart there. The triangle wasn't as pronounced, but it was still a triangle. And I reminded everyone of the end of the year when we had that big run up where I think a lot of people, myself included, felt like maybe we were going to see some worse economic news earlier in this year than we have. And then the wave 5 did continue with the rest of the markets, the wave 3 with the rest of the markets, but not to the same degree. A little bit more of that 45, maybe a little under a 45-degree angle. We retraced right to the 38.2% fib level there on the wave 4. And if you look at that 10-day moving average, the 10, 30, and 50 are in the exact same spot at this moment. And we'll see if we can get the Dow to be the leader again with the crossing of that 10-30 moving average. And we'll still have the same issue that we have on the S&P, because both of these markets are in wave 3s. If we run up here, can we break above this wave 3 high here and start to move up on the Dow? But same story here, exact same story. You want to see some slowing down, I think, of this ascent. Otherwise, it's not going to break that wave 3 high and may not hold. If we take a look here at resistance, you can see that we are at resistance right there at 390. So maybe kind of a little bit of slowing down. We're not quite as overbought here on the 10-day moving average separation on the Dow as we are on the S&P, but similar. But kind of a little more constructive here. Look to the Dow, I think, than the S&P, because it's not quite as vertical on those moves to the upside. Interest rates are certainly helping as interest rates have come down. Remember, we talked about this wave 3 relabeling on the TNX, and then the question of, Zach, I think your mic is on. I'm hearing you typing there in the background.
Oh, apologies.
Okay. So the move here to this 100% extension on the wave 3, we can either move up to that 161.8% extension, which is possible because we went right to the 61.8% corrective level here on the B wave. But oftentimes, if we're going to have an extension, and I just want to be clear here that this zigzag pattern has done what it's supposed to do. When you have a 61.8% B wave correction, the C wave extends to 100%. It did. But periodically, we'll have an extended C wave, which means we go to the next fib level. And that would have brought us back to a 5 handle on the 10-year. I'm not sure after Chairman Powell's comments, we're going to see that now. But we'll find out. Nonetheless, we're probably retracing back to the 61.8% level here, where the extension was on the 10-year, and then we'll go from there and see what interest rates want to do. Are they going to continue to come back down? Will they level off? I kind of think they'll level off. That's right around just under 44 is where we are at the 61.8, so 4.4 on the 10-year seems to be a point where we might just kind of level off. It's also where the 50-day moving average is. So interest rates are helping a bit by pulling back. Same scenarios going on with the dollar. When we take a look at the chart of the dollar, also has pulled back, and that's kind of going to walk in lockstep with what's going on with the 10-year with interest rates. So as rates come down, less support of the dollar. We're nearing a 38.2% corrective level here on the wave 4 on the dollar. And we'll see if the dollar gives us any sort of a bounce. But we bumped our head against these highs. As we had a bit of an extreme triangle here on the dollar. Normally, I say those are kind of rare, but gosh, over the past couple of years, we've seen way more expanding triangles than I can remember in a long time. And it's just the opposite formation of a symmetrical triangle, where you have the mouth on the left side and the point on the right. With an expanding triangle, you have the point on the left and the mouth on the right, but it still signals a breakout, and that's exactly what happened in the dollar. So we came back down. Perhaps we come a little further. We're at the 50-day moving average, but maybe we come down a little bit further on the dollar and hit this 104 level right into here. That might be what we see out of the dollar, or maybe we just hold here at the 50-day moving average. If the interest rates slow their descent now, I think the dollar will level off as well. So those two will kind of work together along those lines. Let's take a look at the IWM, and same scenario here. Now this one I mentioned, is the Dow going to be the leader? You can kind of see maybe the small caps are the leader, and we talk about this a lot, where most people believe that the small caps, not everyone, but most people believe that the small caps are a good indication of risk on, risk off. If people are willing to buy the smaller cap stocks, normally that means the market is in a risk on type of a mode, meaning that willing to go long, willing to take risk. And that's normally a good sign for the equities market as a whole. Once again, this wave 5 move to the upside here on the Russell, right smack in the middle of that tap box. And that stands for time and price projection, by the way. So we went right to it. We backed off. We tested the 50-day moving average, went right back and tested the midpoint of that, and then big move lower. Nice little symmetrical triangle here, and a pretty vertical breakout on the IWM. Also, as I mentioned, that 1030 cross bears watching, perhaps for down the road next week or two. But I still think we need to have a little bit of backing and filling here over the next couple of trading days, maybe even into the close today. Because if we run up to that 210 level, the whole thing with the IWM, the range is 190 to 210, going way back. We had dropped down to 170 to 190, but we broke back above 190 here. And as we broke above this 190 level right in through here, we were able to go up and test 210, came back down and tested 190, and now we're back within that trading range. Can the IWM break above that wave 5? Can it break above 210? We'll see. But if you're long the Russell, same scenario. You don't want it to just keep going vertically. I know it sounds counterintuitive. You're like, I'm along the Russell, I want it to go vertically. No, you don't, because when things go vertically, the corrections are more severe. So it's better if you have 45-degree angle moves. When those occur, then the corrections are less severe. So again, I'm going to be really interested to see if we can hold today's gains into the close. And if we do we get maybe a little bit of a down day or some sideways to down action over the next couple of trading days? I would be rooting for that. And then the Qs, same scenario here. So we have the S&P and the Dow, both in wave 3s and then corrective triangles. And then we have the IWM and the Qs with wave 5s. So the Dow and the S&P, wave 3s correcting. The IWM and the Qs went to wave 5s, also right dead in the middle of the tap box before its correction, trying to break above that 1030 moving average here. So the only one that's officially done it is the IWM. But yeah, if you like that as a risk on, risk off, then that's the one you want to be leading. Gives indication that perhaps there is more to this rally, even if we rest for a couple of days after this. But we have this resistance area right here in the 441 range on the Qs. Same scenario here. We do have some consolidation right through here. You can see going back into February. So that's going to be difficult for the Qs to get above, I think, because there's so much congestion there. So perhaps the big part of the breakout is here, and we can bump our heads anywhere between where we are right now and the top of that wave 5 on the Qs. But a break above that wave 5, and we're off and running again. But let's get a little consolidated. We don't need this much. We don't need a couple months of sideways, just a little bit to allow that 10-day moving average to catch up just slightly and gain a little bit of energy and momentum here if we're going to try to break those resistance areas. Certainly looks like we're going to test them at least, but can we break them is going to be the key that we're looking for. So a couple international markets that we should take a look at. Let's take a look at EWA. I know we have a lot of viewers from around the globe, so we try to stick in a few of these. And the EWA is back up in the top end of its trading range. You can see here right in this area around 24.5. It was there at the end of December, got there again in March, tested it, and that third time's the charm. Remember, if you can't break it on the third try, usually you go lower. If you break above it, usually you go higher. So we broke back down, but we stayed within the trading range down there around 23, and now we're back up to 24.5. Can we break higher here? Once again, the wave 5 right in the middle of the tap box. So all that looking good. Down under, let's look at our friends up north in Canada with the EWC. Take a look at that chart. Also breaking, chart after chart of these hitting the dead center of the tap box, and we're right back there in Canada. So we're right at this area of resistance today. Not quite as pronounced as we had in Australia with multiple touches of resistance, but we're at an area of some consolidation, and we'll see if we can break above there. We are breaking above the 30-day moving average with the 10-day moving average. So you can see all this consolidation where all the markets just kind of said, we don't know what we're going to do with the 10, 30, and 50 all converging to the exact same spot. And you can go back in time and see how rare that is. It happened back here, and then we broke down. And a little bit of consolidation here, and we broke up. And then they got together again here, breaking up this time. We'll see if that can play out. I like to look at Germany and the INDA as well and see what those markets are doing. And so not really sure what's going on in Germany. I've mentioned that before. I thought we might come all the way down to this wave 4 here in Germany, but it held that triangle. So it had the same pattern that all of our markets did with this symmetrical triangle, also breaking out of that triangle. So it's reminding us, another cool feature of this software is when you look at charts and you put these drawings on here, it remembers where they were. So when you bring the chart up again, it shows you. So I didn't just draw this triangle. We did that last week, forming the triangle. And so it reminds you of that. And then you can see the breakout. And now Germany is looking to see if it can break above its wave 5. Is that going to be the leader internationally? We're going to take off above that first in the international markets, or is it going to be the INDA, which, as you know, for quite a while was the leader internationally until Germany decided they wanted to get going again. And no triangle here on the INDA, just a nice zigzag pattern with 100% extension up there just above 53. And we hit this, almost hit it dead on, came back down, and we're consolidating right into this area here, just below that 52 level. I'll give you the exact price tag here, down to 51.75 or 51.78, and then bouncing from that level and probably are going to go up and hit this 100% extension, one would think. Notice the good separation here on the 1030. In fact, other than just a very brief moment in March, we never really had much of a bearish cross there. So they kind of came down. I call this kissing when they come together and then separated back again, came back together without crossing. And that's why you have to be careful. You have to wait for them to actually cross because oftentimes those moving averages will come together and then split apart. And that's what happened here on the INDA. So maybe Germany chart slightly more bullish than the INDA, but this chart still looks good. And we haven't fully, and you might say, well, on that high, gosh, you almost hit the 100% extension. But normally those lines get hit. Now, there are times when we just get really close, but normally these fib levels actually get touched. So I would say that there's still a likelihood that we could see the INDA come up exactly to that 100% level. And I'll give you that level as well. And that would be 53.30 would be where we would be on the INDA if it continues to go higher. Not following through today. So it's not playing the game the rest of the markets are, at least at this point, but perhaps later on it does, and we see an update. The only concern would be on the INDA is if we broke this B level here at 51. So if we break below this, that means that zigzag's over. We're not going to go up and actually touch the line, and then you would be looking for a move back down here to 50 would be the likely move. Extremely high likelihood in the world of Elliott wave that if you come down and break the B corrective level once the zigzag, don't know for sure if it's complete yet, but if it is, and you break level, extremely high, one of the highest probabilities of anything in Elliott wave is that you retrace all the way back down to the 0 point. So it's highly likely that you come down to the B wave when a zigzag ends, but it doesn't have to break this B corrective level. It can come down here, hold, and then decide what new pattern it wants to do. But if it breaks that, then you're going to have that 1 point move from 51 down to 50 with extremely high probability. Nothing's 100% in the world of trading. We know that, but that's about as high a probability as anything on that move. So I know it's not a big move, but it would certainly have a high likelihood of occurring. So that's what's going on around the world. Zach, I'm just going to kind of move forward here. You mentioned Bitcoin is trying to make a move back to the upside. We can follow that with Coinbase. It's just in the same pattern as Bitcoin. We had these two triangles, which is unusual, but happens, where we had a symmetrical triangle. We broke down. You can see the breakdown from this triangle down here. And then we kind of formed another one. Not the greatest triangle, but another one. Broke to the downside there. The key was we held those January highs where it was a resistance level. So what was resistance becomes support, and it did hold as support, and we're trying to bounce higher. We're not getting a 1030 cross here yet, though. You would want to see that to see if we move back higher. Now, the likelihood is that we at least come and test the point of this breakout. That's more Elliott wave rules. When you have a corrective triangle here, and the corrective patterns in Elliott wave are flats, zigzags, and triangles. So when you have one of those, you likely go back to the point. So we did already do that on the smaller one, and the likelihood is that we're going to go up and do that on the larger one. Then we figure out, is that all this is, or are we bouncing and we're off in the pardon me, in the wave 5 and excuse me, off to the races. But we'll have to wait and see what happens at 250 first on Coinbase. And we need Bitcoin to get back above that 65,000 level and go test 70,000 again. If they can do that, then I would say that Coinbase breaks above 250 and starts to take a look at that wave 3 high, the previous wave 3 high before, possibly even going higher than that. up into that wave 5 target. So if we can break above 250, we're probably coming up here to, what is that, about 280, 283, and then we'll see if we move up to 300. But we're holding so far here. Now, on the negative side, if we were to get some sort of a breakdown, when you get concerned is if we break below 200 on Coinbase, where that wave 4 is established. You can see it's right at the 38.2% fib level. So if we break below that, then we may not hold that January high this time, and we may come all the way down here to 150 on Coinbase. But that's just giving you scenarios. If this happens, and nobody knows with certainty what the market's going to do. So I try to show you what's the bullish case scenario, what's the bearish case scenario, and if we move here, what's likely to happen, or if we move there, what's likely to happen. So you keep an eye on those levels, and that's how you incorporate that into your trading. If we break above 250, probably coming up here to 280. We break down here below 200, probably coming down to 150. So that's what's going on in Coinbase. I'll go ahead and show oil. Oil has backed off, as I'm sure you've heard, and we had this zigzag pattern it was as good a zigzag as you could ask for on USO. So there was the A wave impulse, the B wave correction, right at the 61.8% level, my favorite one. This is my favorite zigzag setup because, once again, high probability you're going to extend to 100%, which we did. And look what happened. Oil got exactly to the 100% level, and we've just pegged there for the past week. Past 5 trading days, we've just been sitting right there. And that's giving a little bit of a break to the economy as well. So we have rates pulling back, we have the dollar pulling back, we have oil pulling back. All the things that are problematic for the equities market are kind of helping out. Hence the upward breakout of those symmetrical triangles looked at. And I'm just going to switch here to silver. Maybe someone will ask about gold. I think silver looks slightly more interesting because it didn't quite have as vertical of a move as GLD did. Pretty vertical, but not quite as much as GLD. Then we had a couple little gaps down, now gap up. So we have an island reversal here on SLV. And what that means is that when you have gaps in both directions, so the gap down right there, not this first gap, the second gap, and then the gap back up, it leaves these few bars here kind of floating on an island. And some may argue, yeah, but you filled the gap on that one. Yeah, we kind of did, but it doesn't mean that we didn't have the gap to start with. So we gapped down and we gapped up. And normally when you have that island reversal, the move was down. And so you would expect it to turn and move back up. So that's a bullish indicator for SLV to continue higher. But we've got some problems with where we are from here to 26. So right there is where this consolidation was in April. And if we run up here, no bearish cross there on the 1030. So even though we pulled back down here, it was never to the point where you're like, okay, now we should go short, that we're in a downtrend. We just came down in the area here that was resistance back in December and March, and just a tiny bit in the beginning of April before we blasted above it. And there's that third time, right? 1, 2, the third time tends to continue over the short to intermediate term. That's what happened with SLV. So we had this move up, and then we came back down. We needed a little bit of a correction. We got it right at a 50% level and right at the 50-day moving average. So 2 pretty big things there to act as support, and they have. Now we see if we can get here up to 26, and if we can, you can see the forecast is up near 29 or 30 on the SLV. But let's not get ahead of ourselves. We have to break this level here at 26 first. So if we can break that, then you start looking at these levels up here. But we got to get above here first. So a lot of those things looking good. Let's briefly go and take a look at some of our past case study considerations that we've had here on TradeFinder. And now, finally, gosh, we've been waiting for this on ROL, and it's finally taking off. Our target price is 49, but with that vertical move, we may take that one off today, just because it's getting in the neighborhood. So took its time, had to have a little correction first, but now it's doing what we thought it was going to do. So that one looks pretty good. LRN was another one that we had that you might consider. Everything else has been closed, and it's also taking off to the upside. We had 75 there. We're really close to 75 on LRN. Put the headline up there for you, and just bam, nice big huge vertical move up. And then last week we did TT that we put in Trading Technologies, and hopefully you followed that one, because that one has gone straight up. Didn't need a correction beforehand. It just took off and went right to the levels. So it's everything's working from all the case study considerations. So we're going to close off ROL and LRN after this live show finishes. And I do have one that showed up on our AI search. So you're getting kind of a bonus out of this one. We don't usually do that in TradeFinder, but AXTA, this is the stuff that our alert subscribers at EWOTrader.com get access to, is the results from AI when we send out alerts. The only concern I have here is it's pretty darn vertical on this move. So when we take a look at where we are, do you want to jump on that now? If we look at the moving averages, you can see that we've got a pretty vertical move there. So probably wait on this one as far as sending that out as an alert to our alert subscribers. We do have some thinly traded options, but there is something that you can consider looking at. Just something that there's 254 contracts on the July 35 calls, and that's about the only area that you'd want to look at. Everything else is very thin from an open interest standpoint, but we are going to give this as our case study consideration for this week's TradeFinder. So that'll be all our official one, and I'll give you the target price that we're looking at for here on AXTA. 38.97 is the price target there. So that would bring us up towards this 40 area. So 37 would be about right in here is what we're looking at. So target price, and once again, we can go sideways just a little bit. Remember now, if you wait, the danger that because things, I can tell you that I don't like it when things separate from the 10-day moving average. I like it when things go vertically, but there's no rhyme or reason to how far a vertical move goes before it comes back, and there's no rhyme or reason as to how far away from the 10-day moving average you get. Normally, you just kind of take a look at what it's done in the past, and that just gives you the best estimate that you can. And this would suggest that maybe we have a few sideways days here after this, but we broke above resistance. That's key. And if we put the Elliott wave pattern on, it's in a wave 3, which I like. And we have a huge zigzag pattern here. It's a massive one. And so little surprise that we're breaking, this far, this fast. Right there is where it labeled the 2. So we'll put that. And then that gives us our C wave extension on the zigzag. Actually shows us going a little bit above and beyond where the AI is telling us it's going to go. I like it when they agree. They don't always, because the AI is, just enhancing the wave 3, not taking the Elliott wave algorithm into key. So that's the AI target. That's the zigzag target. So somewhere in the high 38s to 40, somewhere in this range is where AA is expected to go. So if it goes sideways a few days, you wouldn't be concerned about that. The concern would be if we break below 35. So that's your stop. If we come back down, do a little backing and filling, and break below 35, you're out. So that's your exit. That would be your stop. I'm not a fan of putting in physical stops because market makers can see them. Those of you that have been trading for a while, I'm sure you've experienced it. If you've put in physical stops before, where you had a stop in, you got stopped out, and then the stock turned and went the same direction you expected it to go from the very beginning. So we don't want to have that happen. So Zach, I know I've been rambling on quite a bit here. I've been talking as fast as I could because there was less to talk about. I don't know if you want to show the folks how to put this in on the new software, and then get to a few questions at the end. But talk fast if you do.
Yeah, no, absolutely. I'm with you. Let's go ahead and try to accomplish both real quick. So hopefully you can see my screen here on the Hub platform. And this is just where we'll enter our credentials. So I'm going to go ahead and log in. And here we are. So this is the menu view, the jumping off point I always like to save. So you can see a excerpt of all of the different features that this platform has to offer in its entirety. But as Rob mentioned, we do want to leave some time for Q&A for today's session. So I'm just going to get right to the idea. So to post an idea, we'll go to this light bulb up here on the right side. That'll bring you to a list of all of the ideas from the growing community. And as you'll find, there are tons and tons of ideas for you to go in and vote on, interact on, comment on, and that applies to your rank as well. So we are loving to see the growth that's coming through and the interaction. It's really been quite enjoyable. So please join us there if you have not yet. And so I'm sorry, this was just another function that I'm used to hitting off reflex here to go through and see what symbols or what trade ideas to vote on. But don't let me ramble any further here. Let's go to create an idea. And so I know the symbol we're going with is AXTA. And I believe you said that the target price was 30.
Let's call it 38.90.
38.90.
We're going the lower end. Always, if it goes higher, great.
You got it. And the time frame there?
Let's go ahead and put in 2 months. I know you have to adjust that, or you can.
Yeah, no, and actually that's a good way to play that feature. So as you can see, preloaded here, we have 1, 2, 3 weeks, a month, 3 months, half a year, full year. If you need something that's not in those periods or increments of time, you just say custom, and then you can go down to the exact day that you would like. So here we are on May 7th. Rob said 2 months. We'll go out to July 7th. And there we are. So I will come back here to add some context and, of course, make it pretty. But for now, for time purposes, and make sure we have time for everyone's questions, let's go ahead and get right into the Q&A. So let's go ahead over to, we'll start out with Global X Uranium ETF, URA for Irina.
Okay, so do I take the screen back or you give it
Should
back
be
to
back
me?
now.
Okay. I'm sorry, what was the symbol?
No worries, that's going to be URA.
And, a lot of people have been talking about uranium as it's starting to test this resistance area. And with this one, I think I would be a little cautious right now due to the fact that we are right at that previous wave 5 from going back to the beginning of February. So a little bit of separation here from the 10-day moving average. as I was talking about earlier. So this kind of goes right along the lines of what I was mentioning in the beginning, is you don't want it to break above 32.5 right now. If it breaks above it now, so it tries to break above this resistance point right now, and we have separation from the 10-day moving average, you could get a correction. Like I said, there's no rhyme or reason. I mean, we can stay overbought for a while, but I would want to see, I would love to see a couple sideways days and then break above 32.5. And then you've got some room to run here. So maybe up near 34 or so is probably where we're going on URA if we break above that 32.5. So I would want to just be a little patient right now. You do have the DMI trying to form. I don't think that ADX is quite above 20 yet. Now it's at 15, but the two separating directional indicators are certainly what you would want to see. So that even kind of gives you another, let's just give it a couple days, see if that ADX continues up. We go sideways here, and then we break, and then you've got a nice trade. So I would encourage little patience here, and then on a break above 32.5, you go long.
Very well. Sorry, I had to unmute myself there. I was doing some typing, so I didn't want to have too much feedback there. Let's go ahead and go over to NVIDIA. That's a chart that we haven't discussed in a while, and that one was obviously a frequent flyer, a weekly analysis, and Will and I have been having some constructive chat about that as well, so interested to hear your thoughts.
Yeah, and since we're live, just giving some live news, I just had a headline while you were talking that Apple is apparently in talks with Rivian. Remember, they abandoned their electric car manufacturing, so maybe they're just going to go buy one. And seems like there's some talks, preliminary talks between Apple and Rivian. Pretty interesting. But right here on NVIDIA, you can see having a nice day. And then we have to get above this wave 3 high. I know a lot of people would be itching to pull the trigger on NVIDIA again, myself included. The DMI is not too sure yet. We kind of just have nothing for the past month or so as we went through this consolidation and really just a slight correction here. We came down to the 38.2% level, but it was very short-lived. We immediately started back up. But we're back up at resistance now, and we need to see NVIDIA break above that previous wave 3 high. So if we break above that wave 3 high and the DMI starts to set up a little bit, I'll look at the CCI because that's shorter term. For those of you not familiar, my favorite indicators to look at are the DMI, CCI, and CMF. So want to try to set that up, but the DMI can be a touch lagging. The CCI is far more responsive to day-to-day movements, and we've got above that 100 level, which is key. It shades it for you. If that line stays solid, you're between 100 and negative 100, which is where we spend most of the time on the CCI. If it breaks above 100, then it gives you the shadowing to show, hey, this is pretty strong. If it breaks below it, then that's weakness. Right now, we had just a tiny little area of shading there, but we're hanging around the 100 level. And I think that's just because everybody, the market I'm talking about, wants to see if we can break above that wave 3 high. If we do, I think NVIDIA is off and running again. But another one, same scenario here, I would encourage just a little bit of patience here. Let's let it get above that 940 level, that previous wave 3. And then perhaps we're off and going on NVIDIA again. But there's some resistance here, and we need to see that broken first.
Very well. Over to YouTube. Trade Simple would like your thoughts on WEA.
WEA.
Sorry, B as in Bravo.
Oh, I was going to say I'm not familiar with this bond fund. So looking at Walgreens, and they had pretty poor earnings report. I'm sure you saw. Boom, there we go on the negative earnings report. We have a bearish DMI here, I don't look at the DMI as much on the down moves as I do on the upward moves, and that's because of what I mentioned. The DMI can be lagging a little bit, and we all know that downward moves occur very quickly. So oftentimes, by the time the DMI catches up on a downward move, the move's over. So on something to the downside, I do put a little more emphasis on the CCI to look at it on the shorter term. And so we had the big move down. You can see it was weak. And now we've been able to come back, and we're just hovering around that minus 100 level in this area. But we are in a wave 3 to the downside. So I think if you're short Walgreens, I don't see any reason to get out of that short yet. But note that if we can continue to hold this area, it is trying to build support right here at the 17.5 level, working really hard to hold that. We are trying to break below it today, and if we do, then that likely means that wave 3 extends to the downside. But if we can hold it, maybe we get a little bit of a bounce. We are starting to get some separation here between the 10 and 50-day moving averages. That works the same way as if a stock gets too far away from the 10-day moving average. So these two moving averages usually come back together. I think some sort of a sideways trade here makes a lot of sense. Maybe even a put diagonal where you have just a tiny bias to the downside, but something that we stay in a range. You can see that Walgreens can do it. It also can take off when it wants to, but I don't think we're going to see anything like that to the upside, not after that earnings report that came out. And they've got some things to do to restructure inventories, pricing. And it was not a great conference call after the earnings report. But if we can hold 17 here, maybe we get a little bit of a bounce. If not, if we break below 17, then we've got further to go to the downside on Walgreens. But perhaps just even a butterfly somewhere around 16 to 19, somewhere in there would make a lot of sense, I think, where you have just a little bit of a room for a slight bounce higher, slight bounce lower, but stay in the 17.5 range with a 16 to 19 butterfly. I think that makes sense there.
Very well. Thanks, Rob. Sanford says, hey, Rob, how about the S-Bucks calendar?
Doing fine. It's coming down right to our target at 70, and we may take that off at some point because we used 70 strikes when we were up here at 75, so we had a slight bias there. Those of you that aren't EWO Trader subscribers, that is one of the alerts that's out, a put calendar spread on SBUX, and yeah, working about as well as you could ask one to work right now.
Very well. All righty. Over to the next one here. Let's go to Axon for Henry.
AXON?
Yes, sir.
Kind of looks sideways here too. Gap down today, but all kinds of consolidation here. It's going to have to break one of these areas. Right through here, just under 300 is support, and then up at 325 is resistance. You can see it tried and then failed. Maybe just a little too much separation. This kind of a good example of what I was talking about earlier. You don't want to see these resistance levels broken when you're already overbought. They tend not to hold, and that's a perfect example, right?
Rob, I think we lost your mic. Still nothing so far. Perhaps just go internal.
I haven't changed anything on my side. It might have come unplugged or something like that, run out of battery.
That's what I'm thinking. So did you unplug it there, Rob? And then that speaker icon. Apologies, everyone. In the meantime, I do want to remind everyone that we are moving away from Zoom completely for TradeFinder Live. So we are going to only be streaming this session on our YouTube channel and all of our other streaming services that we currently stream to in addition to Zoom. We found that through a number of metrics that we analyzed, that it just does not help us at all in regards to streaming quality. Even from feedback we've received from subscribers via Zoom, the quality is not as high as it is on YouTube. So it'll just be better for everyone, essentially. So just wanted a quick reminder there. Are we back with you, Rob? Not yet. So if there's a Zoom toolbar there, and you can maybe switch that to, if you click on the microphone, there should be an option to switch to the internal mic, or perhaps your computer settings.
Try switching the other call.
Yeah, try switching the other web page, maybe. Thanks for hanging in there with us, everyone. That's the world of digital networking, and things like this can happen with technology from time to time, as we all know. So hopefully Rob will be able to talk it on here, but if not, we are at time. So we'll give it another minute or so. Rob, did you go in your computer settings and to the actual PC volume or audio output, rather? Okay. All right. So what we're going to do, since it's at 2, we apologize that we have to cut it a couple minutes short, but just due to technical difficulties that occur from time to time, we're just going to go ahead and wrap this up to be conscious of everyone's time. I know I want to get back to the markets. Certainly Rob does as well, and I'm sure you all do. In addition to that, so it's always a pleasure interacting with you all. We greatly, greatly appreciate when you allocate this time to spend with us. It truly, truly means a lot to us, especially being able to hear your voices, just making new friends along with clients. And so, without further ado, can't thank you enough. Again, we are moving away from Zoom and going straight to YouTube, so there will be more reminders and updates to come on that. But until then, we will see you next time. Have a great rest of your week, and best wishes with your trading.